Agricultural products, they are on the rise today. Most notably, wheat is extending a rally after Russia banned exports, and this is due to an extreme drought. And this could perhaps affect the prices of the things we eat and drink. We're going to find out whether it will. Matt Keegan is a portfolio manager with Arlon Group. It's the investment arm of Continental Grain Company, which I find this fascinating, is a 200-year-old privately owned grain trading business. One other thing I want to talk about with you before we talk about wheat as well is that we have coffee and rice on the rise as well. So what are we seeing? What type of a trend are we seeing with coffee? Yeah, I mean, we're seeing a lot. The agricultural markets right now are very exciting. We've seen a lot of things develop over the past month and a half, starting with the June 30th USDA reports in the United States about corn and soybeans specifically. And what happened was they had basically gone out and told the world that inventories were lower than expected, and acreage going forward was going to be lower than expected as well, meaning you're tighter on both the supply and the demand side. What that does is that elevates prices for those commodities. Then we saw, some of the things that have happened with Russia and the drought situation. The FSU produces about 30% of global trade in wheat, therefore bringing up those prices. And when those kind of things match with what's happening in the United States, you have ag commodity prices going up in general. Well, and what's going on in Russia and the Ukraine is very significant. You have Russia putting an all-out stop on any of the exports. This is really out of desperation, too, to prepare for the future. Sure. As I said, it's about 30% of global trade coming out of that region. And, they were supposed to be 30% of world exports, and now they're looking like they may be a net importer this year. So very interesting developments. It makes the ag markets and the ag equities very exciting right now. There's a substitution effect that as these prices start to go up, on the demand side, you have consumers debating whether or not to eat rice or eat wheat and feed your animal corn or feed it wheat, and then at the same time on the supply side you have farmers trying to decide whether to plant corn or plant wheat going forward. A bit of a pickle. Well, I would say it's a decision to be made, but it's actually a great opportunity for them. They're seeing record profitability on both corn, wheat, and soybeans as well. That creates great opportunities for people who have acres and are growing grains on those properties. So what does this mean though when you're looking at your breakfast table where we're talking about coffee, and some people don't only have coffee in the morning, afternoon, the night. So what does it mean for the prices for coffee, the prices for any products that we may use, wheat, to get to feed our families? Yeah, it means they're going up. I mean, it means that the market's role is to ration that demand and ration that supply via the price mechanism. So we're seeing ag commodities go up. You're seeing farmers decide which to plant, and they're seeing profits, but at the same time they're going to capitalize on the high prices that they're seeing. What type of a lag time does it take though to get to actually somebody's wallet? Yeah, it can take up to a year depending on the particular grain that you're talking about, but the truth is that these prices start to adjust immediately, and you're not going to see another wheat harvest until a year from now. So prices will be elevated probably for another year, and when you're talking about tight supply and demand situation already in the United States, which is a big producer globally, you're going to see elevated grain prices and all commodity prices in the ag complex. I know you're saying this is a very exciting time for your industry. For someone just turning on Bloomberg right now who's new to following commodities, explain why it's so exciting if they don't understand that. I mean, in the first half of the year, the entire ag market was really in the doldrums. You saw oil prices going up, you saw equity prices going up, and corn prices were going down, and that struck us as very, very strange. But as investor attention is focused on this a little bit more, and you see speculators start to get into the market, it starts to become a kind of a compounding problem, and that brings up prices. But that's not a bad thing because high prices solve high prices. Meanwhile, from the farmer's perspective, they're actually doing incredibly well. You see record profitability for them, and because of that, you see kind of exciting things happen in the fertilizer space. We think proteins are very interesting right now. Explain why that's an interesting sector. The proteins right now are, first of all, you have higher cost of goods, and that has to be passed on to consumers eventually. Otherwise, there wouldn't be any protein production in the country. And additionally, we're seeing record supply tightness because of all the supply disruption that happened about a year and a half ago. Because of the recession, protein producers really cut back. So we're looking at record supply tightness on a per capita basis in the entire protein complex. That's poultry, that's pork, and that's beef as well. All right, Matt Keegan is a portfolio manager with Arlon Group here in New York. Hey, thank you. Thank you very much. Appreciate you stopping by. Thanks for taking the time. And your perspective and expertise as well.